Brian, let me just first start with you. How would you describe the market action? You're someone who has been pretty constructive, not the type to kind of panic and start selling into one of these downturns. So at what point do you think, look, this is stupidly oversold, to use the Bob Bassani phrase, or totally justified?
Well, I think, first of all, it's an honor to be here on a day like today. I would say that, quite frankly, Kelly, fear has been the epidemic in our investing world since the crisis, okay? And Winston Churchill said it best. He says, fear is a reaction, courage is a decision. Today, at least, we saw some courage with respect to the market bouncing back. Now, it's very difficult to make one-day decisions on these types of moves. I think from a fundamental perspective, until we start to see a demand issue come in, right now we have a supply issue. If supply and demand become a problem on a fundamental basis, then numbers will change on a fundamental perspective.
Right.
Until then, we have to have courage and have faith, because the faith in our business is investing in fundamentals, and the fundamental construct of the United States stock market has not changed the last week.
Right, but there's plenty of people who are willing to say, you know what, Brian, I think we're going to get to that, worsening point in the economy, so I'm selling now, and you can wait until you have the evidence in front of you, but I don't want to wait for that. And that's their decision to make. But to the point on community spread that Meg was making with coronavirus off the top, you have someone as respected as J.P. Morgan out there saying, look, if we get community spread, we're talking about maybe more Fed rate cuts, downgrading our growth projections. I mean, this isn't just fear, so to speak. It's fundamentals.
I think it's tough to say that, though. I really do, because I think we're kind of getting ahead of ourselves. I think it's been a structural trend, okay, to default to be negative and then hope for the best, under-promise, over-deliver. And what we would say is that we've had 16,000 people in our country, 16,000 people in the current flu season that have died in the United States alone. Okay, we have 9 active vaccines. The gestation period, nobody knows. And again, I'm a strategist, and the worst thing that anybody can do in our business is be a strategist and economist that come out and call this a pandemic or an epidemic. Let the health people do that. And the WHO hasn't even done that yet. So now we have to let our numbers and analysis fit through. And I think it's way too early to jump to conclusions.
Okay, David, let me bring you in here. As you kind of watch the economy and think about the Fed response, there's been a lot of argument over whether rate cuts would even be the right response if they do go that route. We had a great discussion yesterday about whether there would be different tools like regulatory forbearance on small business loans, for example, that they could offer to kind of help say, look, this is a period of time, unusual situation. We'll try to help you through this and stem the wider fallout. What do you think is appropriate?
Well, we're in a situation where we have something that's very much like a supply shock to the economy. Think of it as if there was a sudden shock to productivity. It's mostly outside the United States. So obviously those companies that are vulnerable to China and Europe are going to be most hardly hit. The question is, how long can we be insulated from this here? The U.S. economy is in pretty good shape, so we can probably take a hit. I think there's not much the Fed can do for a supply shock, but there is some demand side here. If everybody starts canceling trips to Disney World, the IMF is talking about canceling or having a virtual spring meeting here. If people stop buying stuff, that is a demand shock, and I think that will pressure the Fed to cut interest rates again. I don't think it'll do a lot of good. They can't fight the whole thing, but it's the only tool they have, I think, that's practical.
Rick, there's not a lot of rate cuts left, so to speak. And so we saw 3 of them already last year. Now we're talking about 1 and maybe more this year. What do you think about that tool as a response versus others? And just the simple fact of where we're trading today with the 10-year yield going below 1.3%.
Yeah, I think any more rate decreases, any more stimulus would not only be a mistake, it would just be a mortal sin of financial negativity. Why should we take our future insurance when we really have an issue that most likely isn't going to go away, something that's truly recessionary? What's going on now is not going to be inoculated by lower rates. Okay? And I have great respect for David, known him for a long time, read all his work for a long time. But to do something like give away an ease because it's something to do just makes very little sense to me. And as far as the marketplace, I think we're going to close the stocks in positive territory today. Listen, I know it's bad and there's a human element involved. And I'm very sympathetic to that. But I think everybody's overreacting. I think the cover your butt mentality in a social media world has gotten out of control. I think the fabric and the way the stock market has leveled and become this onion of put more positions on when volatility is low. It's their choice. But the deconstruction of that is always much quicker. And just think about this. If we start to move into positive territory with the rebalancing pressure to the buy side tomorrow in stocks, you could see people running after these positions, and that could change the psychology. None of us are doctors, but a lot of us know about the markets, and I think the market's overreacting.